Jill Cuniff is the president of Edge Asset Management, has $3.9 billion in assets under management. Dom here with me as well. Jill, we've been talking quite a bit about, the strategists and sort of their diverging opinions on where the markets will end up. Some are saying, up to 1,600, 1,700 on the S&P. Where do you stand on this?
Well, we are modestly bullish on the market, but there's been a big run-up so far this year, with the S&P up 12% and really on pace to have its best quarter since 1998. That's a pretty strong start to the year. So we really didn't expect such a quick run-up the first part of this year, and the pause that has happened over the last couple of days is certainly expected because that pace really can't continue.
Well, Jill, one of the things that we talked about the last time you were with us was this idea that you have very much more of an income orientation. You like some of those dividend-paying type stocks. They were the big winners, say, over the last year and the last couple of years, but they're not the biggest gainers so far in 2012. It's the exact opposite. So what exactly is your view? Are you still as bullish on some of these big blue-chip dividend-paying stocks, Jill?
Absolutely, we're bullish on dividend-paying strategies because what's happened in the first part of this year is the risk trade has been on. And as I said, we don't really expect that to continue. So looking for quality and looking for long-term growth potential in dividend payers is really a great way to go. And what's interesting is that it's not just the large cap companies, and a lot of people associate dividends with big large cap companies, but there's also a lot of small and medium-sized companies that issue consistent dividends and can grow them over time. And that's where we're finding opportunities.
And actually, in fact, as I recall last year when we talked, Jill, you were discussing some technology companies even that are looking at issuing dividends. And lo and behold, we get Apple this week doing that. Right. Have you added Apple into your portfolio because of that?
We haven't added Apple in our dividend strategies yet. It's something that we're watching because we really want to see some consistency about how management's going to treat the dividend over time. So it is something that we're looking into, and we're very encouraged that Apple has decided to use some of their cash mountain to give back to shareholders. And last year when we were talking, Cisco had just issued their first dividend. So definitely we believe there's this trend for tech companies who a lot of them haven't issued dividends to shareholders in the past to start issuing and giving back to shareholders. They're just sitting on so much cash. It's a great opportunity for them to attract a different type of shareholders and somebody that's looking for that income orientation.
A lot of times when we talk with various fund managers and strategists, they talk about uncertainty and how that plays into some of their calls. And there certainly is a lot of uncertainty right now about what's going on in healthcare here in the U.S. with the Supreme Court about to hear the case on Obama's Healthcare Reform Act. And how does that inform you? As I know that we have talked, you are still bullish on healthcare stocks. How do you factor in the uncertainty from this?
Well, we tend to do a real bottom-up analysis in our fundamental research when we're looking at our investments. So while we like healthcare in general, it's really the individual companies in our analysis that's finding us opportunities. And one example I'll give you, and again, it goes back to that dividend orientation, is Abbott Labs. And the part of healthcare that we've liked over the last 12 to 18 months really is pharma. Because that is a sector of the economy that had been hit pretty hard when people were concerned about the drug pipelines. But we felt that it was overplayed and already priced in. So that was an opportunity to enter that sector. And Abbott Labs is a company who has consistently grown their dividend over time by about 10% on average annually over the last 5 years.
Okay, all right. So some picks from you then, Jill. Thank you so much. Really appreciate it. Jill Cuniff of
Thanks
Edge
very much.
Asset Management.